All right, guys, back to work tonight. Tuesday is behind us. Hope you guys made some money out there today, but it's back to work tonight. Tuesday evening, we're getting ready for a big Wednesday's trading session. We had some more big moves on the charts today. We got some great trades we're tracking for tomorrow. As always, you know me. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? A couple minutes behind schedule. Thank you so much for staying patient here tonight. It was a busy day, and we got some more good stuff coming here tomorrow. Boy, everything continues to be very bearish right now. S&P bearish, Nasdaq bearish, and of course oil bearish. I'll tell you though, we find ourselves in some very familiar territory right now. If you watch last night's video, we have something similar, right? We're all very bearish right now, but there's one kind of key difference here tonight that we didn't have to deal with last night, and that is we are sitting right now at major support with ranges up overhead. So we're definitely very bearish right now. There's no doubt about that. And just like last night, we do have some pullback setups we're tracking here for tomorrow. But I'll tell you though, sitting at major support with a range below us, we might easily see some squeezes, right? Some pendulum swing reversals being triggered here. And so I do want to make sure you guys have a roadmap to make some money if the bears start to crack here tomorrow morning and finally get that maybe a profit-taking bounce here into these ranges overhead. So strong bear market down, major support, range above us. Going to be a great video tonight. Got a lot of great trades to keep on your radar to make some money tomorrow. Now, speaking of tomorrow, don't forget that there really isn't any major news coming in tomorrow. Tomorrow, of course, is Wednesday, December the 7th, also known as Pearl Harbor Day here in the United States. We only have a couple things on the radar tomorrow, right? We get that weekly oil report at 10:30 Eastern time. That is pretty much the only major news that we have here right now. As I mentioned last night, we are still looking for clues ahead of next week's FOMC announcement. Overnight tonight, we're going to hear from the Bank of Canada. Overnight tonight, we'll hear from the ECB overnight tonight as well. And you may recall about a week and a half ago, or 2 weeks ago, when the Bank of Canada raised rates, the ECB raised rates, that really triggered some speculation for the US and, of course, the FOMC raising rates as well. So everybody is watching for any FOMC clues ahead of next week's FOMC announcement. And although we haven't heard much about this right yet, we were still kind of listening in right now and see kind of how the market's going to respond. We obviously saw another big leg down today in oil prices. We talked about this last night. We're still kind of waiting to see how these markets are going to digest this $60 price cap on Russian oil. We haven't heard a lot from China over the last 24 hours, so we'll see if that bubbles back up. But I think right now the big variable here, at least as we go into tomorrow, is what will happen overnight out of the Bank of Canada, out of the ECB. Will they tip their hat as far as what some future rate hikes might be looking at next week with the FOMC announcement coming next Wednesday afternoon? So not a lot of major news. Still same thing we talked about last night. A lot of kind of known unknowns, right? The FOMC next week, Russian price cap, and of course, right, that COVID situation, the lockdowns changing in China. Don't forget that oil report tomorrow at 10:30 Eastern time. You'll want to make sure you trade around that if you trade in oil like we do in our trade room. Now, back to our charts right now. I'm going to cover all my favorite trades on each of these markets here this evening. Make sure you watch all the way to the end because you'll learn something new, something different trade tactics as we go deeper into this video. And I do try to save the best stuff all the way to the end, so don't miss the ending of tonight. If you got any questions, drop those questions in the comment section below. And let's jump right in here. We'll go S&P, we'll go Nasdaq. And we'll wrap things up here on the oil markets. Now, real quickly here, guys, these are all tick charts. So all of these charts here tonight will be tick charts. You can always see the time frame in the upper left-hand corner. And be aware, too, the S&P and the Nasdaq are very, very similar tonight. So whatever we talk about on the S&P can be applied to the Nasdaq and vice versa. So keep that in mind here as well. Looking at the S&P or the micro S&P or the SPY, there are really four key insights. There are four key insights right now that are kind of tipping us off to what the best trades will be here for tomorrow. In a nutshell, kind of a quick summary of what these insights are telling us, we basically had that choppy overnight session, a strong blast down, and we pretty much finished the morning session chopping around inside of a trading range. We then, of course, have that breakout lower. It pauses just a little bit below that major support level. We talked about this 39.12 half level in last night's video. And now we have a very familiar situation from last night, right? Strong bear move down. We're pulling back. We would expect that sellers would be trying to come in and short this thing and retest that low because, as we always talk about on these videos, anytime we see a strong move down like this, we expect to get that pullback, the bears coming in and get that retest of that low. But just like in last night's video, we've got this rising support trend line, which really creates a bit of a variable, a question mark right now, because obviously with all that strength going lower, the bears would love to short this thing, but that trend line definitely kind of poses a definite threat. It's kind of a roadblock, right, for those bears as they're trying to go lower. Now, in my eyes, whenever I see a major support level and I see a trading range, which are magnets above, and I see trend lines like this, the first thing I think of is my goodness, if the bears, if they struggle with this could easily snap and really kind of slingshot, right, as I call it. And remember, the amount we go below the range could easily turn into the amount we go above the range, and that puts us basically where the day began here today, right back above those kind of non-farm payroll lows that we talked about yesterday. So I'll tell you, 24 hours from now, we might look back on this, and this whole move down might be nothing more than one big head fake or one big range kind of fake out breakout that may slingshot going higher. So I definitely want to make sure we have that on our radar. And of course, we'll talk about some short side trades here as well. What do the buyers want right now? Or should I say, what do the sellers want right now? The sellers have a pretty easy, pretty straightforward job, right? The bears, they want to pull back. They want to short at resistance levels overhead, and they want to get that retest of that low. Once they retest the low, then we look for buyers to come in and buy it back up with a double bottom reversal, or we look for a breakout going lower. The next breakout level going lower is then at that 38.67 even. As far as buyers want, again, buyers want that double bottom reversal, or we may see a bit of a slingshot reversal going higher, and we definitely want to be keeping an eye for pullbacks and bear traps as we go higher here. So most important thing right now is anytime we see a very strong move down, we're expecting that pullback and that retest. If you watched last night's video, we talked about how whenever you have a major support level below you and that trend line, we really got to be careful right now to be a seller. So the best way that I can short this thing right now, knowing that I have that range above me and I have that trend line right below me here, the trend line combined with that range is a really, really big clue. The entry pattern I'm looking for right now is basically a crown reversal. We have to get up into resistance. We have to basically try to trap in some of these buyers, right? Hopefully buyers will come in and try to run higher. Now here's the problem. I can't just sell this. That range above me is too much of a magnet, and that trend line below makes a very difficult job. So I have to make sure I wait for the buyers to try a couple times and use their stops along with a trap entry for that short. Now, if I can't get that trap entry, I'll have to get down below that trend line and use that trend line for a breakout pullback. But be aware though, right? Be aware. The better entry on this is going to be the pop up, rope in those buyers, let them try once, let them try twice, right? Now those buyers are locked in, trying to go higher. And where are their stops going to be? Their stops stops will be right below that low. Strong move down, they're going to want to retest, just like we talked about last night on the video as well. The most important thing about this one, though, is we need that trap high. Why the trap high? Because that trend line is staring us right in the face, and we need that trap to avoid selling right into that trend line. If I can't get it, then we look for that kind of breakout pullback on the other end. Be careful on that breakout pullback, though, because obviously I don't want it down here, right? I don't want it right into that low. I want to make sure I can at least get a 1-to-1 before I retest that low. We'll know more about that tomorrow morning in the trade room once we get there. But again, most important thing right now, strong move. We expect them to want to retest that low. Let's get this thing going up, trap in some of these buyers, literally trap in some of those buyers with a bull trap to avoid that trend line. And then if we can get underneath that trend line, we're using that now as a key area of resistance to finish off that move as we go back to retest the low. Now, once I get down to that low, I can certainly buy off that low. I'm going to talk about the long side as we go lower a bit later on in this video, so make sure you watch, keep on watching here. I'll cover that double bottom reversal here in a moment. Another thing you want to be prepared for is that slingshot reversal, right? And this could really come in a lot of different shapes and sizes. The key is where does the market want to go? It's going to want to run back up around that 39.90, 39.95 level. Now, there's a lot of different ways in which we can trade that reversal. For example, one of my favorite ways is as it starts to break and run higher, we can look for what we call a two-try trap. So strong move, shallow pullback, a higher high in price, and that trap right below that low. You guys are learning all about traps inside the free trading course, right? So if you've taken my free trading classes, we talk a lot about stuff like this, right? Strong move, shallow pullback, higher high in price. Don't be afraid to go out and grab a channel off that high, bring it down to that low, right? And then grab that trap off of that low. As you guys learn in the free trading course, love to use channels to find those entries off the right, or find the entries off the low of a new bull channel. Another one to keep in mind would be, let's say we pull back here to the moving average, and then we blast and run up from there, right? This, of course, would be the one try, two try for the sellers. Bears try once, bears try twice. That would not surprise me at all if they held that trend line and really jumped going higher. If they can, now what we can do is find a trend line off the high, find that channel now off the low. And as I'm always talking about in the free trading course, I like to use those prior swings and grab that first test off the low of that new channel. Now, we could be a trap setup, we could be a failure setup, we could be a pullback setup coming off of that low, right? So again, if we go 1, 2, and then jump off that moving average, jump off that trend line, again, we know now we have that rotation in the works here. We know where the market is likely trying to go, and then we're simply trying to find that channel. And again, any of the entry patterns you guys are learning in the free trading course, the traps below prior swings, the seller failures below the 21 EMA, the pullback combinations, strength moves here. Okay, you guys know those patterns, which, by the way, reminds me, I know that most of you guys and gals have taken the free classes. You've learned these entry patterns. I know you're making money with them because I get so many great emails every week with screenshots and P&L snapshots. So love that stuff. But listen, if you're here for the first time right now, if you have not taken the free class to learn all the entry tactics I'm talking about, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take my free trading course. The strategy that I teach in that free class will show you a simple trick to know where the winning trades will be each day. Makes it easy to stay patient. And I'll also give you 4 different entry patterns to help you get started making money every day with that video course. If you're missing the best trades right now, if you're taking too many losses, definitely grab that free trading course. It's perfect for someone trying to make the jump into full-time trading. Another pattern we talk about in the free trading course is what? The pop and grind, right? Let's say we start to pop up here and we begin to grind going higher here as well, right? We're going to pop up. Again, that trend line combined with that range above just might not be just may not be or may be enough to cause this thing to push higher here. If I mark off that high, if I can mark off that low, right? See what I'm doing here? Find that hidden channel, right? A lot of times it'll pop up, grind. We draw off those highs, bring it down off that low, right? Find that prior swing and then grab. And again, I'm keeping things simple right now, right? Bear trap, seller failure pattern, pullback combination as we go. So again, keep in mind, right? One more recap here. As we go higher here, right? The name of the game right now is trapping in those buyers, using a bull trap, right, for that short going lower to avoid that, right, to avoid that trend line. If it keeps going, right, if it doesn't 1, 2 and back down again, if it keeps going higher, then we start looking for those 1, 2, 3 moves, 1, 2, 3 reversal, looking for that reversal back up, etc., as I mentioned there as we went. Now, here's a very important question here for tomorrow. What if we end up retesting that low? What if we go lower, right? What if we don't pull back, right? What if we get another one of these scenarios we saw today? What if it simply breaks down and breaks lower and goes lower? So how do we buy it? How do we sell it as we're going lower here? That's a really, really good question. Why don't we answer that question now over on the NASDAQ. The NASDAQ, of course, is very, very similar here to the S&P 500. We have a lot of similarities, right? The day begins in a range. We get that breakdown right after the open. We pretty much spend the rest of the lunchtime session, 10 o'clock into about 1 o'clock, chopping around sideways. We make that breakdown. Almost took out that major low. Lots of support here below us. And like I said before, we have that trend line coming in right off that low. So the bears, they want to sell this pullback, right? The bears want to short this pullback and retest that low because that's what happens whenever we see strong moves in one direction. But again, major support, range above me, trend line coming in off that low. This could easily pull the string and rip and really give us a nice strong, what I call slingshot or pendulum swing, right, going in the opposite direction. So it could easily be nothing more than a head fake and a fake out breakout. So same game plan, right? Same game plan I talked about going higher here is certainly on my radar for the NASDAQ as well. My next big question though is now, how do we buy it? How do we sell it? What if it pulls back and goes lower? What if it keeps grinding lower? What's the game plan here for us? So the first things first is we're expecting that pullback and that retest of that low. One of my favorite trades in a range-bound environment like this is to get that double bottom, right? So for example, breakout, nice strong move, bears come in, they retest the low. Once they retest that low, think about what's going on right now. The smart money, right? The experienced traders, they're selling kind of the underbelly of that trading range, right? It's like a fake out. It's like a breakout pullback, right? Not a fake out breakout, but a breakout pullback, right? So bears come in, they short this thing off the low of that trading range. They retest the low. The smart money now got their short. Now think about who's selling down here, right? Who's selling down there? These are the rookies. These are the inexperienced traders. This is exactly what I said earlier, or why I call it a double bottom reversal, right? Strong move down. Once they retest, now let's try to trap in some of these bears. Remember, in range-bound markets, you want to buy low at support, focus on failures, and use stop losses as fuel. So think about now the bears coming in. They try a couple times this low. If they fail, where are we going next? We're going to go right back up into that range and possibly go even further, right, with that pendulum swing off of that low. So kind of, think about a scenario like this. We retest that low. We trap in those bears. We get the bears trying once. We get them trying twice. We run those stops with what I call a 2-try failure pattern, right? You guys learn about that stuff in our free trading class, right? We run those stops and we start to make our move going higher here. Now, one of my favorite follow-up trades as we're going higher, first of all, where does the market want to go? It's going to want to take out the opposite side of that trading range, right? Because the range is the magnet. Again, we're still very bearish right now, but major support below us, range above us, these types of scenarios. Now, given everything's very bearish right now, again, I want to make that very clear. Sentiment is still very, very bearish, so we can't force these reversals, right? But we definitely be looking for the bears getting trapped in and look for that run back up. So we know the top of the range is a magnet. We know the pendulum swing on the opposite side is an objective. Okay, so knowing that, if I can get that basically two-try failure, if I can trap in those bears and use those stops for fuel, I can now go out and look for a new channel, find out the high, mark off that low, draw that prior swing, right? Find those swings. I like traps, right, off the low of these channels. I'm trying to keep things as simple as I can here tonight, right? But a bear trap pattern, a seller failure pattern, a pullback combo. This, of course, is a 4,000 tick chart, right? We're not going to trade off that slow time frame tomorrow in our trade room. But again, you'll learn a lot more about these entry techniques in that free trading course. So now we trap in the bears, right? Double bottom reversal. We get the price pushed in our direction. We now find that new channel by drawing off the highs. We then drill down, find the entry off that low, and then where's the target? At the other side of that range. Leave the runner for the run here. The one thing I want to kind of make sure you remember is that I want this entry before we get back to the other side of that trading range. Okay, guys? So if we end up, for example, right, if we end up kind of going higher here and still running higher, you know what I mean? If it runs all the way back to the other side of that trading range, you got to be careful, right? Got to be careful. You want to be getting in on this, right? You want to be getting in on this on the way back into that trading range, right? Makes sense. And keep in mind too, it may keep going here, right, for more. So definitely leave that runner as we go there. That's how I want to buy it if we get a pullback and we double bottom as we go here. Now, what's not going to be very easy to buy here is if we do run lower here overnight. I like the idea of the move up, get those bears involved, sell back down. I like that idea, right? That 1, 2, and back up. That's something I like to trade in our trade room. If we don't get that pullback, right? If the market keeps on running lower here, right? We open up, we sell off immediately. Obviously, this now is still quite a bear market. How would I buy it? How would I buy a retest or a move into that major level at 465? The only way to safely buy it at that point, if we don't get that double bottom reversal, is a crown reversal pattern. And these are very specific. Again, we still want to use the seller stops as fuel, but we now have to use a little bit more, a little more conservative entry, right? Because we're so darn bearish at that time. Again, remember, I wouldn't even be thinking about a reversal if it wasn't for the location at 65 with that range up overhead, and we may not get anything close to it. But if we see a crown reversal, if I can see bears coming in trying once, if I can see them try twice, and this is where you've got to be a little more patient. This is why I said before, this type of entry pattern will be a little more conservative, right? Because we know we've got the bears in control, think about it, right? If I was to, for example, get the bears try twice and then use their stops, right? Like, this is how I generally like to do it in a double bottom reversal, right? But if all we get is a move lower and the bears come in once, bears come in twice, what do you think the chances are there could be a channel still hanging out up there, right? And if I try to be a buyer going higher, what do you think the chances are? Come right back down, stop me out, and pick my pocket. That's the reason why when you're trying to pick a bottom like this, you really got to go in and go for a trap, right? The trap entry, that's why I said it's a little more patient. It's a little more precise. What this will do, though, is now bring it on, right? If we have a channel coming down off that high now, I'm already in the green, right? We're already making money on that trade by the time we get up around the highs. If they come in now and send it lower, okay, fine. I've already got my stop to point of entry. I've already locked up some profit. Does that make sense? Right? Is that making sense out there? Does that make sense why if we go up and back down, the double bottom will work? Because the bears are already in. right? They're taking their profit at that low. But if we just keep on grinding down, the bears, they're still hanging out, right? They're still waiting up there. So that's why a crown reversal, right, or basically a two-try failure with a trap entry is going to be your best bet, right? Hopefully that gives you some light bulbs going off here right now. If that makes sense to you, do me a favor, will you hit me up in the comment section and let me know if that's kind of making sense for you, right? Because you want to buy as low as you can to make sure you're not walking into that potential buzzsaw off the high of that channel. Another thing to keep in mind here, if we do go lower, will be another breakout, right? Another breakout going lower could easily be in the cards as well. You know, we could take out that low. We could easily go in, hold that pullback, and blast running lower. Now, where's the next objective going lower? We talked about this on the S&P. The Nasdaq has that, what's that, 11,231 level, 231 and a quarter is that next big low. Make no mistake, though, this is a very big support level down here. So the bears, they've got their work cut out for them, right? But if they can, you know, and again, we're 2 days in a row, right? So it does seem like this market should be right for a bounce, but again, we are very much bearish in the overall sentiment. And as we talked about last night, a lot of stuff going on right now would normally have these markets going higher, and they still aren't shaking off the bears here. Anyways, if I can get that retest, if I can take out that 465, if the bears can come in and not struggle and go higher, right? But if they can come in, they can hold that pullback and we can get a good blast going lower. Remember, anytime we see a 1, 2, 3 breakdown, anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that low. To get the entry off that, it's pretty simple. Just mark off a trend line off that low, bring that trend line up around that high. That'll give you kind of like that hidden channel, right? And then what you can do is mark those prior swings. I love to use prior swings because that's where traps live. I want to get above the 21 moving average because that's where buyer failures live. And of course, pullback combinations. Now, there's a lot of open space down below. What you kind of want to think about with these is we know where we want to look for the entries, right? That's kind of the easy part off the top of this breakout pullback. But remember, the first leg is the measuring leg on these, and the third leg is, well, as you can imagine, that's your target, right? So if you're wondering, okay, so where do we place our targets down here? Again, we know where the market wants to go, but whenever I get that, you know, kind of 1, 2 blast going lower, I find that hidden channel off those lows. It's a pretty simple kind of equation, right? It's that first leg that we measure, and that third leg, that's what will give you that really specialized kind of final target there, all right? So now we kind of know more about as we go lower. I would also imagine too, you know, this is a good example of the NASDAQ here. Notice how it kind of pops and then grinds down, right? We call these pop and grind, right? Pop and grind channels. It's kind of more of a range on this one, right? More of a range there. But imagine though, we get that pop down and again, right? Could easily begin to grind going lower. If it pops down and starts grinding down the bottom of that chart, obviously we're looking for more. And remember, this could easily happen in the S&P as well, right? The NASDAQ and the S&P are going to be very similar here. Mark off that low, mark off that high. Same idea, right? Same idea. Find that prior swing, try to get up around the high of that channel. We talk about in the free trading course, the first test is the best test, right? We're going to pop and grind going lower. The first time we pull back to the high of that channel, that bull trap, that buyer failure, right? And you guys don't want to hear me repeat myself over and over going this, right? But first leg, third leg are going to be your targets, right? So trap, failure, pullback combo. It all depends on, again, can we take out that low and can we get a convincing move going through it? If not, we may end up at that low trapping in those bears and bam, right back up into that trading range. So I think by now we've got a pretty good idea of what's going on, right? We are very much in the mindset right now that yes, I'm looking for a retest of that low. I'm going to use that to try trap. If they can run this thing back up, we know where we're going and we're looking for reversal patterns we talked about earlier as we go higher there. And there will likely be some follow-up trades, you know, up around these highs here. We'll talk more about those details tomorrow morning in the trade room, because it is somewhat likely here, because we have such a big overall move. It would make perfect sense here to have a market, for example, kind of pop up into a bull kind of spike, kind of a spike and grind there, pop and grind, find that channel. It would make perfect sense here to find that channel, get that entry off the low, and then once we get up around these highs up here, right, then we start getting those buyers coming in. They're late to the party. 1 try for the buyers, 2 try for the buyers, and whoops, right back down into that trading range, right? Because again, it's an overall bear market. We've gone 2 days in a row with these big moves. I definitely like that. Again, I like any of those reversal patterns we've talked about. But once we start kind of getting up around the pendulum swing area, once we start getting up around the underbelly of where we were last night, then you go, okay, I'm probably a little bit too late to the party there. Rope in some of the weak hands, right? Rope in some of the rookie buyers up there. Remember, if we get that strong run up, when they retest the high, that gives you what? That gives you that double top reversal. Just trapping those buyers and use their stops, right? Use their stops as fuel to run back down right into that trading range. That's what I mean when I say there'll probably be some additional trades there later in the session tomorrow if we do get that pop, that pullback, that retest, which we like, right, and the double top reversal from there. So we'll cover more details on this obviously tomorrow morning in the trade room. And don't forget, tomorrow, 8 o'clock Eastern time, we'll do all this stuff together, right? Tonight we're simply, kind of game planning right now, and tomorrow we'll go in and we'll trade this stuff together. Boy, oil, wrapping things up here on oil. We talked about this last night, right? A lot of stuff going on right now that would normally have oil ripping higher here right now. And tomorrow might be the day we get that bounce, but right now we're still very, very bearish. There's not a lot different here on the oil right now, right? We have a strong move down for the bears. Anytime we see a strong move in one direction, we expect what? A pullback to resistance overhead, and bears come in and sell back down to retest the low, right? Once we go back and retest the low, do bears struggle and give us that reversal back up, or do we break out below that low and take out a measured move target and move our way down to that $70 a barrel? I'll tell you, if you open up a daily chart right now, it's very easy to see that if they can crack below this 73.5 level, and that's a big if, right? Because it is a pretty big major level. Again, open a daily chart up, open a 4-hour chart up, and you'll see, right, this 73.50 area, 73.75 area. That's a big bottom on a 4-hour chart right now. And you can definitely see on your daily chart on the oil, if we break down, it seems like $70 a barrel is just a no-brainer, right? As we go lower. Now, again, that's a big if though, right? That's a big if, because just like the other markets we've talked about here so far tonight, we're at major support with a trading range above us, and it's looking like another trend line that we have to worry about. Now, the good news on oil is that trend line is relatively steep. So we can kind of use that same game plan we talked about in last night's video newsletter. So a lot of this, guys, is going to be very, very similar, right? As we go up into some overhead resistance, we've got that strong move down, but again, major support, range above us. What do? We have to we need some sort of edge, right? To get some sort of edge to sell short right now, I'm going to use the buyers, right? I'm going to wait for those buyers to try once, let them try twice. Now, this is a good thing about oil. Oil has that trend line a lot steeper, right? Whereas in the NASDAQ and the S&P, the trend line is like right there, right? So think about it, right? If that trend line is like this, then I have to use a trap entry, right? 1, 2. Why a trap? Because I have to sell as high as I can, right? Or I got to get underneath that trend line, which when they're flat like that, is just not very easy, right? That's not a very attractive trade right there below that trend line. Does that make sense, right? So when you have a really flat trend line like that, you got to make sure you're selling as high as you can, that bull trap, right? That 2-try failure with that trap entry. And then, of course, in this example, that trend line's a lot steeper, which, as we talked about last night, is kind of a good thing, comparably speaking, to the S&P and the NASDAQ. So we pop up into resistance, 1, 2, right? Stops get hit, right? Stops get hit, and we're looking for that short back down again. The ideal entry is buyers once, buyers twice, and just like we saw today on the S&P and Nasdaq, get the buyers once, buyers twice, and use that trend line, right, for the entry. Right? So that's kind of a variation that we talked about last night. Again, same idea, right? Same idea. 1 try, 2 try. Can we use that trend line though? Can I use that trend line for that short back down again? We'll see what we get here as we go. Or maybe that trend line holds too much, right? If we see a pop up, right? Strong pop up, shallow pullback, right? Shallow pullback, higher high in price. What's set up? Trap, right? That trap. And now in this one, the pendulum swing. The pendulum swing here could be potentially really, really large, obviously, right? The pendulum swing could put you back around 78. I would be pretty impressed if they got that whole entire pendulum swing. What is very reasonable right now, what I would think is, if the bears don't come in and hold this area here, I would expect this market to want to rotate back up to at least that 77 a barrel level, because that also is that low from yesterday as well. So I would imagine a good objective here, it's a little bit different on the oil than it was on the others, but a good objective there would be that 77 level up overhead, right? Also too, right, that kind of pop and grind, right? That pop and grind going higher here. Okay. Now think about that. We've talked about these pop and grinds. We've talked about buying off the low of that channel. But what if the market, and this of course will also apply to the S&P and the Nasdaq, what if we went up and then immediately shot right back down and began the same thing going lower? That could be a short. Right? As you can see, remember, the market's very bearish right now. So don't be afraid, right? If we do pop up and we don't get one of those pop, shallow pullback, higher high, right? Remember, you got to get the right setup to buy that pullback or that bull trap. If it pops up and kind of V tops and right back down again, I'm not going to chase after it. Get underneath that trend line. A lot of times these will be some pop and grinds. We can grab that short off the top of that channel. All right. But other than that though, right? Pop, shallow pullback, higher high in price. We know where the market is going to go at that point. That trap below that low, that pop and that grind going higher here, right? Grabbing that channel and grabbing that first test off that low right there. Or possibly here we go up, pull back, jump off that moving average, right? Then we got that new channel coming off that high, off that low. I'm obviously simplifying this because I've talked a bunch about this one already today, right? But again, the idea is back up around that 77. And again, we might end up getting that nice strong run higher, getting that retest of that high, right, for that long setup off that low, retest the high, right? And then again, we're still a pretty bear market overall. Buyers come in, they try a couple times up here. We've already got that strong move, that retest. Anytime we see a strong move in one direction, we expect that retest, and then let those buyers try a couple times, and we can sell right back down into that trading range. The amount above the range, the amount below the range, that creates an objective for that pendulum swing as we go lower. All right, guys, I don't want to go too far down the rabbit hole, but that's some things to kind of think about tomorrow morning when you're trading on your own. And of course, I'll be there with you guys tomorrow, obviously, in our morning trade room. Same idea, right? Now, one kind of thing that's a little bit different here on the oil, right? I've got this first leg. Remember how I said earlier, first leg, third leg, right? First leg, third leg. There's your first leg. There's your second leg. So third leg here, I'm watching right around, I don't know where it's going to be just yet, but I do know how big that first leg is. So if we go lower there off that 74, 67 level, right, that'll put us right there. So just be aware that as we go lower here, we may end up getting another fake out breakout right back up into that range above us here again. So just kind of keep it on your radar going lower here. We pop up, the bears get short, they retest that low. We trap in those bears, right? 1 and 2, and we're buying into those stops. Where's my target? Back up, right? Back up to retest the high and potentially all the way back up into that trading range, right? If we do end up rolling lower, right? If we roll lower here, what's the game plan at that point? And this, of course, would also go with the S&P and the Nasdaq. If we keep on rolling lower here and grinding down, all I'm going to do is find a new channel off that low, bring it up around that high, wait for that pop up, and keep using that 1-2 failure pattern. Because again, we're still pretty close to that major low right there, right? So we'll trap in some of those buyers, see if they want to grab it and go higher, and sell right into those stops. All right, guys, so if it keeps on rolling lower, I'm going to keep on adjusting that channel down, keep waiting for that pop up. Again, still very bear market, still has a strong move down that wants to retest the low. Once we do retest the low, 1, 2, and then back up from there. All right, guys, so be aware of that as we go up, as we go down. And of course, as always, I'm sure the market will throw me some curveballs for tomorrow. I'll make sure we clean up and fill in any missing pieces tomorrow morning in our morning trade room. Speaking of which, tomorrow morning, 8 o'clock Eastern time, we get the game plan all set to go here for tonight. Tomorrow morning, 8 a.m., come out and trade this stuff with me. I'll put all of the membership links. I'll put all of the free course links. Everything you need to get more information, I'll put that right in the description of the YouTube video. Please don't be afraid to call the office if you have any questions along the way. You can also use live chat in the lower right-hand corner of the website as well. If you have any trouble getting into the free classes or joining as a student, don't be afraid to call us in the office or use live chat. We're always here helping out along the way. All right, guys, I'm going to wrap things up here for now. Thank you so much for sticking around tonight. I know a little bit late here than I normally like to be here. It was a busy day here in the office, but I couldn't leave you guys hanging. Want to make sure you give you guys a roadmap to make some money tomorrow. That's it tonight, though, guys. Have a great evening. I'll see you guys tomorrow morning, 8 o'clock Eastern time, as always, in the trade room. If not, we'll come back tomorrow night and do it again, getting ready for another big day coming on Thursday. Guys and gals, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.